Here we are in 2024 and the markets have continued to stay near their highs. Gary Glover's dissected the markets, looked for the best opportunities and is here to talk us through the trading shares for this week. Good morning, Gary. How are you?
Yeah, no, good. It just doesn't feel like anything's changed really the last week or so here. Sort of market's sort of still hanging on here. Sort of, yeah, it's had a pretty good run, of course, but yeah, I just, for me, still worried about maybe a bit of a January peak here. But I just know the first 3 quarters of the sort of 24 the cycle we're in just might be a little choppy here. So not expecting any big drawbacks in the market, but could see some consolidation there. I think that's the thing I'm mindful of here, having seen this run. We're just starting to see a little bit of a few breadth issues as well, and just the few distribution days, and they're not too many yet, but a couple in there. So just got to be a little cautious here.
Okay, well, as we're being cautious, we'll start off with the NASDAQ and just look at your report for this week where you've mentioned it's squared out from the October 2023 low. What does that mean?
Yeah, so just oftentimes you can sort of see oftentimes the 50% of the range will be really important for markets, particularly actually it's probably more so for the Aussie market. Happens a lot here, but you do sort of see, I see guys doing, looking at Fibonacci projections, like a 1.68 or, 1.5 times the previous leg up and stuff there. So they're things that sort of people look for in terms of projecting the next leg up there. But just over time, I've noticed that oftentimes the last leg up in a bull phase can be like 50% of the whole move, or the first leg up can be 50% of the whole move there. So it sounds kind of wacky there. You can sort of go up for a whole year, maybe 2 years, and then the last 6 months can make up 50% of that entire range. So we can see here that the last sort of from that October low, so really only 4 months. The last 4 months has pretty much been the equivalent to the last 15, 16 months range here. So we've had a fairly quick move in those 4 months for what are going over sort of 16-month period here, you might sort of say here. So just that can sort of, that last leg there can sort of square out the 50% of the range here. So is this sort of something to be mindful of? Happens an awful lot on our index, the XJO, but does happen in other markets as well. But just interesting level here, just at the timing there, just a lot of, if I look through a lot of the cycles this year, Chris, I think just so many sort of January highs there. I'd say 80%. So some of those are probably split between early January and late January. So, but yeah, just a year and a cycle we're in here where we do tend to see a lot of sort of January peaks there. So just mindful of maybe hitting some resistance there, having a little bit of congestion there ahead.
Okay, well, that sounds like it's echoing from what you were talking about last week with your projections for the year ahead. If we have a look at the S&P500, we can see that it's just been shy of those highs. So the highs that we saw back, that's late 2021, before the market started to crumble into 23, late 22, I should say, as it crumbled into 21 into 22. Nonetheless, here it is, 47.83 sort of where you've got the chart. How important is this? Because I seem to remember you were talking about ideally you'd see the market come up and not make a false break, but actually trade a little bit under the high and possibly throw back a little or toy around with a bit of congestion under the high. How's that playing out?
Yeah, that's my preference there. I mean, in terms of, trying to look ahead here and have the ideal sort of setup that would be, pull up just under the high, sort of have a period of congestion under the high, and then eventually sort of break through that high and go through. So, if you want a good example there, the Nikkei at the moment has spent a lot of time congesting under the high, and it's just ripped through in the last month or two, and it's gone like a power, it's just gone ripped through it, gone straight up here. So we want to sort of see like the S&P here maybe congest here for the next few months under the high, have a period, not having a deep correction there, but just having a bit of a congestion, a bit of a pause, and then almost like a cup and handle, I guess you might sort of say, Chris. A nice little go up here, nice little handle there, and then push through there. So that'll really set up the back end of 24 for a pretty strong move, and then it'll run through to 25 there, and that hopefully will culminate with inflation sort of being behind us and then rates starting to edge back here. I don't think they're going to go as low as everyone thinks, but just rates coming off the boil a little bit will be enough. Inflation gone there, we'll get growth back on the bandwagon there, and I think you'll see that equity market sort of thrive maybe in the second half of 24 here. So that's the ideal setup moving ahead here. It doesn't always go to plan, of course, but yeah, I guess the other thing I'm mindful of too, we've just gone through the sweet spot in terms of the 4-year cycle, coming out of that October midterm year, up into the end of the pre-election year. That's the best 15 months, of the 4-year cycle. So we've just sort of hit that sweet spot. This is just a period where we tend to get a little bit of bit of churn here, a bit of congestion ahead here. So, but yeah, look, at the end of the day, look, market's still trending higher, still moving up there. Just starting to see a few little signs of maybe losing some momentum. So just probably time to tighten up a little bit here.
Okay, well, looking at that in the S&P, you did mention the Aussie index earlier and saying that the squaring out seemed to be more important or more relevant in previous cases on the Aussie. As we look at it now, we're still just under that high. Seem to be sort of holding in there, definitely from the extent of the ranges that we've seen for the last 1 to 2 years. Any update on your thoughts on the Aussie market?
Made very little there really. So we've had the resistance there, obviously just under the old high. That's close as you can get, 10 to a point, and then just starting to congest under here. Still, we've seen sort of BHP, Rio, Fortescue, they've pulled back here. The banks are still hung on here. I mean, like CBA is close to 20 times here at the moment. Really no growth forecast for the next couple of years. So it's sort of hard to see how they can really kick on here. Because if they're fully priced and then some more. So I just think there's a good chance you'll see a bit of congestion there. There's still seeing sort of some movement in the second tiers, which we sort of talked about the last few weeks. I sort of thought most of the gains in the big stocks have been run, and we're kind of right about, obviously, the big materials have all pulled back. I think the banks are probably next to pull back. But you still might see some of those sort of second tier stocks still run a bit longer here while the market still congests. But just, I just sort of feel like I probably just need to sort of start to think about tightening up here, or maybe just starting to build up a little bit more cash here, I think. So, yeah.
Okay, well, that's the Aussie. Just to round that one out, the indices, the Dow Jones seems to be holding even higher. You talked about the Nikkei breaking out. The Dow Jones did push higher and has surged really well over the last month or so, and seems to be really consolidating right up tight in the high. So what's your take on what the Dow Jones is doing?
Yeah, just starting to congest here. So got a little bit of a sideways orientation there now. So can have a little pause for another run there, but it's an upward sloping pause. I prefer to sort of see those sort of downward sloping pause. I know it's a minor point there, but yeah, what we've sort of done here now is we made a high, we've pulled back, sort of rallied marginally higher again and pulled back. Now we're sort of rallied marginally higher again. So we're really just starting to overlap here, Chris. So instead of, you think about trends that are sort of built on top of each other, they build on the trend. And then when they really get going, they leave spacing. When they start to overlap, that's a show of sort of, losing momentum. So if it doesn't show the show on here, but if you drill into the daily chart there, you'll see that the last few little spikes, little highs here, they're overlapping below the previous low there. So that's to me a bit of a loss of momentum as well. So just a few signs here just to be cautious, starting to be a bit more cautious here.
Okay, so taking caution from the Dow Jones, it's been the leading indices. We move into the trading shares for this week. You've got some really good charts to look at. The first one is A2M. Now, definitely what you've got here, the 50-day, it's a downward trend. There's no two ways about that. But when we look at the last couple of months, you've highlighted 0, 1, 2, and 3. So 0, 1, 2, 3 higher lows, a great pattern. That's a whole link we'll have at the end of all patterns that you've dissected and talked about in more detail. But what's this setup here for A2?
Yes, twos I like it here. I mean, it has can't sort of show it here, but if we look at sort of like the 5-10 year chart weekly, it actually come back to retest an old low and made a false break. It went to a new low and then recovered. So it sort of made a big false break there on the weekly sort of setup there. And then on the daily chart here, we can zero in here now and just sort of starting to build here. So we've sort of got our low. There's a bit of volume at the low. We sort of pulled back a lot of volume again. We started to see a bit of volume sort of come in on each little pullback. And so we've sort of now got a sequence of sort of high lows building here, and now just got above the 50-day moving average as well. So look, it's, Rome wasn't built in a day. Sometimes these sort of basing patterns take a little while to build here, but got the sort of the hallmarks of a bit of a base build sort of starting to set up here. I think it's one of those stocks that no one's really talking about too much as well, Chris. So sometimes these quiet stocks that no one's really interested in, they can kind of just sort of drift higher there. I think sort of Codan was sort of one that, if I go back maybe 6 months ago, everyone sort of was sort of off the stock and no interest in it. But that stock just sort of retest the low, come back, started to build, and then just sort of grinded higher, and it's had a pretty good run here. So just want to keep an eye on there. I think as long as that 50-day moving average sort of holds here, I think it's a good sign here. But it's just good sort of base building characteristics sort of going on. Not sort of, I can see there on some of the pullbacks there, very light, not too much selling going on that. Even that last pullback of the 3 there, no selling going through there as well. So started to see a little bit of buying come back in again. So it looks still needs to sort of prove itself a bit more, but I do like what it's building here. I guess the beauty is here, sort of, we got a pretty tight stop in here. If we're wrong here, we've probably got a small loss here. If it does sort of build here, get going here, there's a pretty good risk reward sort of set up here. So that's one of the reasons I do like it.
Okay, so a nice possible trade, having oil just sitting there watching. Another one is IGO. You have seen this one a few times before, but what's standing out to me in your report this week is all the timings that you've got mapped out here. So you've got all the timing schedules here, and then different number of days in between. Are these the days that you've marked out on the chart?
Yeah, I was hoping you weren't going to focus on those, so I just did want to remove them.
What was it that...
there's a strong timing into the low there, so there's a nice sort of like this, in terms of sort of looking at sort of seasonal cycles and yearly cycles, decade cycles, 4-year cycles, there's different cycles to look at. So with a lot of the GAN cycles, they look at the square of 90 and the square of 144, and a lot of commodity resource-based stocks follow the 144 cycle. And this stock here has found that low into the 144. We saw it actually with ResMed, which is not a commodity-based cycle. It had exactly the same cycle as well, sort of into the low. Came back and had a bit of a bounce out of that 144 and then sort of started to build. The things that I really like here is that we've had a pretty deep pullback, like a 50% correction in the price. And then we saw a look at that volume come in down at the low there, big volume there, sort of accumulation sort of style, finally stepping in at the lows. And then we've had a bit of a bounce, and we've sort of pulled back again. That pullback so far, pretty light selling all the way down on that sort of pullback. And I only just started to see volume in the last few days back down into the lows there. So remember sort of ASX and sort of Ramsey and a few stocks that have probably come off this year, even ResMed as well. They sort of fell pretty hard, exhausted into the low, had a nice bounce, and they sort of come back and started to build. You're sort of seeing that volume sort of stepping in near the lows. So sometimes the base take a while to build. So just to me, there's a sort of got base building sort of setup here. I think S32 was sort of one very similar, which we saw, again, a nice exhaustion in the low, nice bounce. It's actually sort of probably kept going, whereas the IGO's come back for a retest. But yeah, just some good signs there. And that, sort of copper, nickel, sort of cobalt space has probably been, those sort of metals have been out of favour here. And the one thing we've sort of seen in the last few years is that oftentimes that the metals, they're going, we've seen lithium have a run and then cool off, and gold have a run and cool off, and uranium sort of cool off and now having a run. So you're definitely seeing that the metals go through different phases here. So quite a few of those metals are out of favour at the moment. So people talking about maybe copper here and nickel. So might start, I think copper prices started to sort of move up here. So there's a few, I think you're sort of seeing, some of those other sort of miners there, can move here. So you got to look at the ones that are a little bit out of favour here. But I do like the sort of setup here. That does look to be sort of, kind of base building for me.
Okay, so that's nice base building. The next chart, look, you mentioned it last week, so I might just ask you simply what's changed.
Yeah, look, I've sort of looked at the data.
Lyng Group. You mentioned, you said you like the setup.
Yeah, well, last week we were looking at the daily chart. I think there was a little VCP on the daily, but if we look at the weekly, we got a bigger VCP on the weekly there. And now we've sort of broken that B wave and then broken a second wave here. So this looks it's a pretty bullish break here, really. That's a really, big sort of corrective. Yeah. What sort of, Stan Weinstein talks about, the bigger the base, the bigger the breakout, So, but yeah, this has sort of been building quite nicely here. And started to break out here. So, looking at the bigger picture there, I mean, I would have thought, this is sort of 850 at least here, sort of coming out of that pattern there. So, some good volumes there. Looks good on a daily week. I think any little pause, any congestion there, definitely one sort of stock to be looking at there. Bit tricky there because it's a little bit, stock doesn't move around. It sort of does have some wide ranges, does move up and down, quite a bit. So you're sort of, you almost got to wait for a little bit of a pause or a tightening up just to sort of take some of the risk off, because really, trade's not about sort of, having the stock going up or down there. It's sort of risk management's pretty important as well, making sure that we get an entry where we can sort of manage our risk, have a decent reward as well. So just got to wait for probably a good, good little setup on John Lyng here, but it does look very constructive overall.
Okay, we'll definitely keep watching that one. Charol, one that we have looked at before as well. It started to be climbing a little more. You mentioned before about the Dow where it had that sort of horizontal congestion, and you preferred a bit of a pullback in the congestion, tight congestion, staying higher in the range, of course. Are you happy with this pullback that you're seeing here with Charol?
Mate, the two things along that chart there is the volume out of the locus has just been really, really, really firm here. So we've seen big volume come into the market there. We've seen obviously the sector move. So obviously we're sort of, we've seen the sector being, show some relative strength, but we're seeing some really big volume through there. And then we've had that little bit of a congestion there, little 3-week pause there. No selling come in there as well. So pull back on next to no volume there. Little sort of high tight flag or sort of style. Doesn't meet high tight flag rules, but it is like a little pennant flag there, just showing very light volume there. And when you see those sort of tight price action after a really impulsive move or strong volume there, just does sort of, kind of leaves you in favour of running with the trend here. So I think this looks pretty positive for me. So more than likely, $13, $14 at least. Maybe we go back to the $15, but the volume is pretty strong now. It's pretty strong volume.
Nice, well, good supportive volume on the pattern. Another one you've got in the chart after Charol, you've got GrainCorp, GNC, and you mentioned Stan Weinstein before. A longer base could mean a longer breakout. Has this been sort of a base building formation happening here? It's sort of been travelling sideways. What do you take that as?
Yeah, I think sort of Stan also talks about sort of the sector too. When the sector's, if you're trading a strong sector there, the performance is going to be, you get the same sort of technical pattern. And one's in a sector of strength versus one's, non-sector of strength. The performance is quite different. I was obviously a lot better in the strong sectors there. So, we're seeing the elders running, I think. RFS been running. So a lot of those ag stocks are really look pretty interesting. So got a bit of a bullish engulfing pattern there. So we've got a low, a high low, some pretty good volume sort of setups there. So just sort of got, some good sort of basing sort of characteristics again there. So, considering the light volume into that low and then a nice little, bullish engulfing pattern there, some good volume there. So probably got like our second or third, but probably got a 0, 1, 2, 3 pattern there in the weekly again, Chris, as well. So that's pretty constructive as well. So that does look quite good there. Charlie.
Oh, well, that's GrainCorp, and as you said, good strong sector. Incitec pivot. So talking about agricultural and also things that are sold into that market or suppliers. What's happening here with this chart to get you put into your report?
Yeah, just sort of put it in there just because the sector's catching my eye and the price action has really tightened up here. So this is one to keep an eye on there. It's probably this is one not to be trading here yet, because it could, they can easily sort of break down here. This trend is still down, so that still does favour probably the odds of breaking down here. But with the sector all running hot here, if this does sort of stabilise here and then start to move up there, you could probably get a little VCP there on the weekly sort of show the tightening price action. So there's a nice little VCP on the daily there. So if we were to get a break up out of that, that setup, there's definitely one to sort of follow here. But this is one just to watch here at the moment. Maybe the odds sort of still slightly, on the downside here, just from the trend being negative. But you can see that volume has dried right up as well. So, with the price coiling, volume sort of coiling, it's just definitely sort of, just one to be watching really closely here.
Okay, well, there are a good few names to take into the trading week with some setups, those to look for, and then possible 0, 1, 2, 3s and that kind of thing. Are there any other insights that you're having into the market, or you're pretty happy with what's been progressing and you keep looking for those leading sectors, the leading companies for your trades in the week ahead?
Yeah, I just want to stick with the leaders here, I think. So, I guess you're sort of, it's a funny old market there. It's definitely seeing stocks within sectors sort of, kind of running in different directions there. So, I just think the market's had a pretty good run here. I just think probably point to be sort of tightening up a little bit there. So, but with me personally, I've sort of been probably keen to sort of lighten off here. I know sort of I do a bit of options there, Chris, so I'll probably be letting a little bit of stock get assigned here on Thursday. So, which means basically I'll be sort of cashing up a bit there. I probably, would like to hold a bit more cash in the accounts there. Just feel like the market's sort of there's just not too many setups. I noticed the last couple of days, some of the technical setups, just some of the stocks that are setting up sort of, technicals, sort of setups there where they should break out. I've been failing, so I've been sort of popping up and then not carrying on. So a few stocks that I was watching there that were breaking out some of these little tight patterns were kicking up and then coming right back into the range again. Whereas I think over the last few months, they've all been kicking through and then running. So just starting to see a few failures there. So just telling me just to be a little cautious there with the market there.
Okay, well, that's good intel for the week ahead. Thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.